Hi, my name is Arun Sundaresan. I head the passive verticals at Nippon Life India Asset Management, that is ETFs and index funds. I have a total experience of 22 years. Out of that, 20 years is with the current company. Recently, we have launched two index funds, a new fund offers, that is a Nippon India NIFTY Auto Index Fund and Nippon India NIFTY Realty Index Fund. Both these funds are reasonably large sectors. They contribute more than 7% of the GDP each. And both the sectors can be considered relatively high growth. The reason I'm saying this is that India, as you are aware, is amongst the fastest growing large economies in the world. So when that happens, the income levels of the households are likely to go up significantly. With that, their aspiration levels are likely to go up. They're likely to spend more on discretionary things like real estate and auto. So both these are common and benefit both these sectors. Both the sectors again have a lot of government initiatives. For example, the production-linked incentives for the auto sector, RERA, and Smart City Mission, and so on and so forth for the real estate sector. So all these are likely to benefit both the sectors. These two sectors have done very well in the recent past. The last 1 year return is in excess of 40% against Nifty return of roughly 21-22%. With the recent correction, they've also corrected a little more, providing relatively attractive entry points. You could consider investing in this NFO through the Dhan app and through Nippon India's website and other applications. Thank you very much.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.